Hello and welcome to Crux Investor. We're here today with the CEO of Superior Gold, Chris Bradbrook. Hello Chris, how are you?
Morning, I'm good, thank you. And yourself?
Not too bad. Where have you come in from?
Where have I come in from?
Yeah.
I was coming from Perth.
Oh, fantastic.
So I've been in London since Saturday.
So you're going to tell us a little bit about Superior Gold. Why don't you give us a sort of 2-minute elevator pitch on the story just to set things up and then maybe perhaps dive into...
Well, we bought this asset in 2016, October 2016. And essentially what I saw was an asset that had been in continuous production for almost 30 years. So it's not like we were showing up and saying we're the smart boys in the room that know how to run it. It obviously was a stable mine. It had been in Barrick for a number of years and they'd sold it to Northern Star, so it had kind of been buried within a bigger portfolio. The price was right, it was only 40 million Australian. The infrastructure to replace would probably cost you about $2.5 billion US in today's dollars. So anything you did to grow it was always going to be quick, low capital intensity. It had a large resource base. It was is the sixth largest historic gold producer in Western Australia. So I saw a tremendous asset with great opportunity that basically had been unloved. And there's so many examples where companies have taken an asset like that, and that's what matters to them, and they work it and they make it into a success. So that fundamentally was why I like the asset, and a first world location.
You bought into a producer with existing assets in place at a price you felt was quite reasonable.
Correct, yeah.
Okay, fine. Let's deal with that last year first. So what happened? Obviously a year ago today, price is about 3 times what it is today. There's a few things happened. Why don't you kind of talk us through that?
Right, well, actually, if I may, I'll go back to the year before first.
Okay.
2017. So our first 15 months of operation, we were putting about $2 million US into the bank every month. So we were running it as a business, making money. That was the philosophy. That's what we wanted to do. And then in 2018, we started hitting a bit of a wall, and we really struggled with the operations, and the grade dropped, and we were trying to figure out what it was. And ultimately, what it turned out to be is that the previous management had been essentially harvesting what Northern Star had left us, but not replacing it. So there was no ability, once we'd used up what was already planned out, with flexibility.
This must have been part of the data set which you inherited.
Yeah, it was, but of course you assume your management are replacing what they mine, but they weren't. So basically we had to pull everything apart last year and figure out what it took to do it. We changed over management. We put in more technical people because
You've got a new COO.
Yeah, So that I would say that was the final piece of the puzzle.
Right.
Even with those changes, it still wasn't happening. So we sent Keith Boyle, who's now our CEO, down there for 3 months. So I said, look, tell me what's going on.
And what did you discover?
Well, first question I asked him was, is it the ore body? Because if it's the ore body, then you're right. It's all game's over.
Yeah.
He said categorically, it's not the ore body. He said, you got the right people. He said, there's just needs to, you need to basically focus on basic operational things. It's absolutely fixable. And as a result of that, he spent 6 weeks of the 3 months, and he liked what he saw. So when I offered him the job, he'd done his due diligence and said, yeah, I want the job. So I think that's, really a testament to the asset.
Right.
And the deal is he's based out of Toronto, but for the next 6 months, he's living basically at site.
Right.
It's like he's not coming home until he's got it back on the track.
So let's come on to him specifically in a minute and get back to what he discovered or what he thinks he sees in this. He's looked at the operations. Your costs quite high, but the AISC is quite high. Certainly the 2019 numbers look quite high. I mean, is he looking at optimizing that, or is that something you think that needs addressing, or is it something more fundamental than that?
In terms of the cost, it's all about grade. Because for the first 15 months, we were all running an AISC at about $1,000 US. So we were making 200 plus, $200 to $300 an ounce margin.
But it's still sort of, mid-level rather than...
Oh no, it's not. Look, it's not the cheapest mine, but it's not the most expensive.
Yeah.
But really what drives it for us is our unit costs are already low.
Right.
So it's all about grade.
Right.
You get the grade back to where more like a 4 gram stope grade, that's when you're going to make money.
So tell me, when you say the unit cost, what do you mean by that?
Well, what it costs you to move a ton of rock.
Right.
We've got a very stable handle on those.
Right.
We've got them low. So what then drives it is, well, how many ounces, grams
so
are you going to get per
you
ton?
can move volume of dirt as
efficiently
yeah. with the equipment you've got.
Yeah.
No need to change that. You just need to hit higher grade.
Correct.
Ore. Right. Okay.
And if you look at the ore, but like I say, for the first 15 months, we had a good solid plan, and we were mining around 4 grams stope grade and making money.
Right.
When that plan, the long-term plan kind of evaporated, for want of a better word, we basically had to, they go to the easy stuff.
Right.
Which is like 2.5 to 3 grams.
Right.
And there's loads of that.
Right.
But it's not making you the money.
Right.
So basically, one of the first things Keith has done is he's gone and said, okay, let's put together a life of mine plan. Where are the gaps? So you actually now can, don't mine that grade, because that's going to make us money. So it all sounds probably very simple, but often these fixes are. You just need someone to come in with a fresh set of eyes and say,
right.
And I was just down there for 5 weeks. So between me and him, we were basically worrying everyone to death, just saying, look, this is what we got to do. Let's get back. And it's not like we've not done it. That's the point. It's not like we've had this for 2.5 years and we've never made it work. We did. We did make it work. We just have to go back to what we did.
Right.
And we're already beginning to see the changes. And it's simple.
So tell me about those. So you've made some quick fixes.
Yeah, well, quick fix is really getting people focused on the plan and maximising grade.
What were they doing before?
Well, as I said, it was because I think they were so frantically trying to get stuff through the mill, they just go to the easy stuff.
Right.
So there never was that long-term planning going on. And so we've instituted that. For example, one of the things you want in an underground mine, you want 3 months of developed stopes laid out ahead of you. So if something goes wrong with your plan, you've got an option.
Yeah.
We didn't have that.
Right.
In the time Keith's been there, we've already gone from no stocks to a month's worth of stocks.
Okay.
So we're already seeing that change. And then we found out that, because they were being a bit, I guess, frantic with their efforts, they were diluting the ore, so that was part of that was amplifying the grade issue. So all these things we've been putting in place, and we're just basically forcing the guys to basically run to a higher standard.
Right, okay.
And I guess you'd always like to think that people just do that. And initially I kind of wanted to run the company lean, and for a single asset I was thinking, well, why do I need a COO? Well, it turns out, when things aren't working, you do need someone like that can step in and say, okay, this is what needs to be done. Right. And at some point when we've got this back on the track, we will be looking at other assets, and you need a COO for multiple assets.
Well, again, I'd love to come back to you on M&A as an option in a bit. So again, what are the other kind of quick fixes? He's looked at the plan. He said, here's what we need to focus on. Is there anything else that...
No, I mean, when you say it out loud, it always surprised me how sort of basic it sounds, but often things in life are like that. But it is all about having the plan, sticking to the plan, having the flexibility so if something doesn't work. So in other words, you say, okay, if this goes wrong, how are we getting it back on track?
Right. Any other new hires that you're thinking about, having learned that a COO is quite important to you?
Well, no, not really, because we've got all the people we need at site. I mean, Keith has made a difference, a big difference, no doubt about it. And and we're looking at the, what was I saying, the dilution. I mean, that's a big thing. But that really
dilution of?
Well, you've basically taken too much of the waste.
Got it.
So mining it more efficiently, so you actually mine to the grade you planned.
Right, okay.
Because that's, obviously if you've got a 5 gram stope planned and you dilute it to 2.5, I mean, you're not going to you might take more ounces out, but you're not going to make as much money.
So you haven't been sold a dud in the sense?
No, not at all. I mean, that, and like I say, I think one of the things to remember is this is an asset that's always been in production.
Yep.
Some assets...
But have they mined the good stuff out of it, I guess, is the question people are asking.
They've mined the easy stuff,
yeah.
Right? But I think also part of the thesis was that we could make money with what we know is there, but there's something else there. I mean, I'm absolutely convinced of it. There's going to be another. It's a big system, so we will find more.
So what are you doing in terms of identifying this new system or potential new system?
Well, I think part of it is really pulling apart what the asset is. I mean, you've got a drill database that's all digitized, and if you were to drill those holes today, it would cost you $1 billion US. Right. So it's an incredible exploration tool.
Yeah.
So a big part is pulling that apart, figuring out.
And who's doing that?
We've got our geologists at site and consulting geologists, and we're probably going to give the database to. There's a group in Toronto called Goldspot.
Yeah.
And they do big data mining.
Yeah.
And I think ours is a big enough set that it'll probably be. be useful for that approach. So we're doing what we can because that absolutely is our best exploration tool.
Right.
Yeah.
And so let's talk about some of those longer term strategies. You mentioned M&A as a potential, but do you feel that you've got to kind of sweat this asset first, or can you concurrently look at potential M&A activity?
Well, you need the currency, right? And I mean, we're so beat up, we just don't have the wherewithal to look at things.
And how much cash have you got?
Well, we got 15 million US.
Right.
Our enterprise value is 20 million US. It's insane.
Yeah.
Right? So, I mean, the bet anyone would have to make is, okay, if you believe what I'm telling you, that the fix is there, we are so ridiculously cheap that it is a really good opportunity.
Yeah.
Right now, the market's pricing us as though we're going out of business, which just is not going to happen.
Right. Well, I guess that's why you're here today, to answer those questions about what the future looks like. So maybe talk to some of those things. So you're going to sweat the existing data and try and see what you've got there and optimize whatever, all that activity.
Right.
M&A, is that a realistic opportunity for you? You've got 50 million of cash, but I guess that's
15.
Yeah, 15.
Yeah.
15. Where I guess it's allocated towards current
activities. Yeah, no, we're very focused on the asset. However, when people show us stuff, I mean, you've got to be pre-prepared. So you've got to learn about what's around so that when you are ready, you're ready in terms of your knowledge. Yeah. So we definitely look at things and turn stones over. But number one focus is the mine.
Great.
But absolutely, I mean, one of the things we learned from this, if we'd been a multi-asset company and we started hitting these issues, we could have pulled people from other operations to help us out. Yeah. So that has shown us, just from that point alone, it's having multiple operations is a good thing. Yeah. Okay. And investors are obviously asking for it. They don't like, you live and die by what happens at your one asset. Yeah. And investors generally get uncomfortable with that.
Would it make you nervous? I mean, given you say undervalued. There's a claim I think most people make, but
everyone's like, if a CEO doesn't think his company's undervalued, he shouldn't get out of bed in the morning.
So,
but we are.
You are undervalued, but you're the one.
Yeah.
Great. Yeah. Does it worry you or make you nervous about the cost of raising capital in this market with your current situation to do M&A activity, or do you feel that you would look at optioning stuff, deferred payments? I mean, how would you tackle an M&A?
Yeah, I mean, you're right. I mean, where we are right now, our cost of capital is high. But like I said, we're really viewing M&A more now because we just want to know what's out there. So that when we are in a position to do it, we've already done our background work. We've already talked to potential partners. But the first thing is we've got to get this sorted out, get the market believing it, get a share price that reflects it, and allows us to actually go and do stuff. Okay, great. So you're looking at optimizing the current processes, operations, hope for higher grades, being able to identify higher grades, reduce that AISC down, feel with this new COO you've got the right leader for the technical team in country, and we should be positive about the future. So correct. Is that the message? Yeah, absolutely. But yeah, it's totally focused on fixing the operation right now.
Perfect. Okay. So let's talk about the team. Tell me a bit about you. What's your background relevant to the operation?
My background? Well, I mean, technically, I'm a geologist by training.
Right.
It's been a while since I've actually done geology. So I worked in the industry from 80 to 95. And then I was an analyst, for mining analyst, for about 6 or 7 years. Right. Then I went back into industry. I was VP Corporate Development for Gold Corp, but this was when all they were was the high-grade Red Lake mine. And then when I left there, I formed New Gold, which was a very different company to what it is now. It was just the New Afton mine, or deposit at the time. So we raised the money to build that. And then when I left there, I started up a company called Crocodile Gold, which really kind of led me to all of my knowledge base in Australia. But that became Newmarket Gold, that is now part of Curtin Lake Gold. That's right, yeah. And the Fosterville asset, which drives their valuation, was part of Crocodile Gold. Wow. Right. And then when I left there, I was looking for something else to do, and ultimately, this is what came out with Superior Gold. Attracted you to it. So you don't sound very Canadian. No. Well, I'm Canadian technically because I've got my citizenship. Right. There, yeah. Okay. So, but you're based over there, from the UK originally. From the UK, yeah. But with an asset in Australia. Correct. Yeah. Well, I like first world assets. So I really like Canada, Australia, and certain parts of the States. So that is really
Great.
our strategic focus.
Okay. So I'd like to, obviously, new COO on board. You told us a little bit about him in terms of what he's done. So what's his background?
Well, the press release outlays it, but basically he's worked for small and large companies, North America, internationally. He's done everything from operating as an underground manager to a general manager to a COO, to feasibility studies, raised money. So he's got an MBA too. He's a mining engineer. So he's got lots of strings to his bows. He understands all the various parts that matter to a public company.
Okay, but you got him focused on cutting costs and finding ore.
Well, you just look at the problem in front of you and say, this is what we need to do.
Yeah.
So, and again, like I say, he spent 6 weeks at site knowing full well what I needed and still said, there's a tremendous opportunity. I want to be part of it.
Right, okay. Well, that's interesting. And so who else is on the team? If we look at the sort of constituent parts for companies of your size, you need to know what you've got. Mm-hmm. Who's looking after the financing and finances of the business?
Well, the finances, our CFO is Paul Armstead.
Right, and what's he charged with doing? What have you asked him to do?
Well, quite simply, is make sure you know where the money is.
Right.
Don't do anything stupid with it.
Right.
And if we are in a situation where we need money, give me the heads up well in advance.
Right.
In terms of actual raising money, we've had to do it. That typically will fall to me.
Right. Okay.
So
and where do you go? So tell us a bit about that. So your shareholders are what, institutional at the moment?
Yeah, largely institutional. I mean,
Canadian, or
there'd be Canadian, some US, and there's one or two in Europe, but basically it's a North American-based shareholder base.
So any names in there that we'd recognise?
Northern Star are our biggest shareholder.
But that's presumably part of the deal.
Part of the deal it was,
right,
yes.
Okay.
Century Select, which is now CI Investments, they're a large shareholder. Donald Smith.
They're from a Canadian promoter.
Donald Smith's out in New York.
Yeah. So I meant the CI guys are.
Well, I was a promoter. I mean, they're a big sort of blue chip Canadian fund. Yeah, I'm sure they'd be a bit worried if you heard them called a promoter.
Okay.
So those would be some of the big shareholders. We had BlackRock at one time, Arbim. So we've had actually a pretty good list.
Names in there. And how big's your retail following?
I would say it's reasonably big. It's I would say we're probably about 10 to 20% retail.
Right. Okay. Yeah. Mainly Canadian, I'm guessing.
And North American.
And North American.
Canadian.
Right, North American.
Yeah, I mean, every now and again I'll meet someone from Europe who has picked the story up, but...
right. Yeah. And is there much liquidity in the stock at the moment?
It's better. When we first started out, I mean, we were, because of those bigger shareholders, there wasn't a lot big float. So, liquidity early on was tough, but it's better now. I mean, we're not trading millions of shares every day, but a few 100,000 usually, and then every now and again you'll see some blocks. Yeah. Okay,
and those are clearly the institutions, trading in and out. But so what's the retail guy? What are the retail guys doing for you in terms of? Do you think you've got people understand the story? Or, I guess,
I would. I mean, because I've done this a few times. I've always valued retail, and I mean, one of the challenges of retail is making sure they understand what you are. But I think from the questions I get from retail investors, they do actually understand.
What questions do they ask?
They ask the same sort of things you're asking, which says to me they're not off in some strange place asking questions that aren't relevant. They absolutely understand what matters to us. They ask the same questions institutions do.
Right, okay.
Right? Which is the same questions you're asking, because it all boils down, there really are 2 or 3 key questions for our story.
Yeah, well, absolutely. And that people need to believe you can deliver against those.
Oh, absolutely. I think I've got a decent track record of doing what I say, and I am absolutely totally confident that we are fixing this.
Okay, fantastic. And so who else is on the board that we need to know about in terms of active members of the board?
It's a very small board, and it was done like that deliberately. We've only got 5 people on the board, and I think with at its basic level, the board's job is basically to make sure I do my job, or management does their job. But I think with a smaller company, you want people on who are willing to roll their sleeves up and help you, because we just don't have the numbers of people. So our chairman is Mark Wellings, who was former investment banker at GMP. He ran their London office for a few years as well. We've got Tamara Brown, who is VP Investor Relations and Corporate Development for Newcrest in the Americas. There's myself. There's Rene Marion, who was chairman of Richmond. He was former Barrick an Orico, really good mining engineer, understands capital markets. Well, he was the chairman of Richmond when they got sold. They went from 30 million to $1 billion. So he's seen this movie before, and he worked for Barrick on this asset,
Right.
so he knows the asset. So,
but is he an active
yes,
participant?
yeah.
In
No,
this?
I talk to all of them regularly because I use their expertise. Like Rene, I mean, very important for us as an operator. So early on, when I was trying to figure out what was going on, I said, well, you know, what would you do? And actually, Keith Boyle actually came through a recommendation by Rene when I said, well, who do you know out there who would be a good person to take a look at this?
Okay.
And then we've got one nominee from Northern Star.
Right.
Yeah.
Okay. And are they, I mean, they obviously must know a lot about this asset, and the fact they've stayed in says something. I mean,
I think they'd like to see us grow.
right.
And
It wasn't
so-
just like option money, as it were. We'll just do a deal, we'll
Oh well, look,
keep some shares.
we could have raised enough money. We could have just paid them out cash.
Right.
There were a couple of things. I think they liked the opportunity in the business model, so they thought they could make more money.
Right.
They saw that we could be a building block, I believe. And selfishly for us, I knew that the number one question I get asked was, well, why would Northern Star sell it? So having them in with someone on the board.
Go on then. What's the answer?
Oh, what's the answer to that? Well, I mean, you got to look at, because what we're doing here is really kind of what they built their business model on. But within about 3 months, they bought 4 mines. They bought this one, a mine called Jundee in Australia, a mine called Canona Bell in Australia, and a mine called Kundana. And 3 of them they got running the way they wanted them very quickly. So this became a bit of a head scratcher for them.
Right.
So they decided to run a
In the
process.
sense of what? It was
Well, it
complicated.
just wasn't going where they wanted as quick as they wanted to.
Right.
But they actually gave us the entire operating team that we needed. So the team that made a success for us when we took it over were the people that had been working for them previously.
Right.
So they were very important to us in getting it working.
Okay, thanks for that. So
Yeah.
let's talk about last year in the context of how do you think it went? What would you have done differently? I think you've answered some of these questions already, but if you try summarize that for us.
Look, I gave you the reasons why it didn't go the way we wanted. So what would I have changed? Well, I guess like as it all, you know, all these things, you say, well, you know, early when it first started going wrong, we probably should have been more dramatic in trying to fix it immediately. But you sort of think, you know, the next quarter wasn't bad, so you think, okay, maybe now we're back on track. And then late last year, you could see it was beginning to go off the rails again. So yeah, I think like if I really knew what I know now, I would definitely have moved faster.
Hindsight mining.
Well, yeah, but it's you know, we were asking all the right questions. I had the board involved, and we were, well, what is this? What do you need? And so yeah, but you know, that really is hindsight. I mean, it's like you're peeling away layers of what it takes to get there.
Right. Okay. And again, I know you dealt with this slightly. So this year, what should shareholders be looking out for in terms of what you're doing?
Well, quite simply, on a quarter-by-quarter basis, they just need to see that we're improving how we're operating. We're back to making money. That is simple as that.
So making money or cash flowing? What's...
No, making money, because I mean, I'm all about free cash flow.
Right.
And like I said, when we had the asset going the way we wanted, we were making, making into the bank $2 million a month.
It's not bad.
So that's what
Get back to that as quickly as possible.
Yeah, and you know, we built a second mine, an open pit mine, all internally generated. We've never raised money since we went public. So we must have been doing something right.
So you're debt free. So there's no kind of funky financing sitting in the background looking to clobber you?
No, if you look on the balance sheet, you'll see a small number for debt, but it's because we've lease financed the equipment.
Right.
And then it just shows up as an ongoing cost.
Sure.
Yeah.
Very normal. Normal. Okay, so give us your 5 reasons why you think investors should be looking at you and investing.
Well, look, you're looking at a first world. That's a start. Your first world location, a substantial asset where there's tremendous exploration potential. 100,000 ounce a year producer with an enterprise value of $20 billion US. We will be going back to free cash flow. We're one drill hole away from a discovery. At some point, we will. We've already expanded the reserves and the resource. But if we find something new, higher grade, I mean, there was an ore body there at one time that's part of our mineralization called Timor, and it was 1 million ounces at half an ounce. So if we found another one of those,
you'd be happy.
Yeah, we'd be happy. But this is what happens to these assets. I mean, Fosterville, I mentioned before, that was 3 years ago a refractory ore body at 4 grams, and everybody knew it was rubbish. And they drilled some holes, and now they're mining 50 grams a ton. I'm not saying we're going to find 50, but I'm just saying that's what happens with these systems.
Yeah.
If you try and understand them and you drill in the right place, there will be extensions. They don't just end. And then this system, this is an immense system. It really is.
Okay, I appreciate your candor and honesty in dealing with these issues. You know, to put your hand and say, look, we've had issues, we acknowledge that, we know what they are though, and we put things in place to fix those. The investors should bear with us and look forward to, you know, what we're going to try and do this year. I think that's a very, very positive message.
Yeah, I mean, we're telling them they should do something. Clearly, it's up to them. But I look at our share price, and it's been a downward trend since last April.
Yeah.
I mean, as I said...
You think there's some upside there?
Well, a 20 million enterprise value for the story I've just told you, usually you get those valuations because people think you're going out of business.
You'd get that for the equipment, wouldn't you?
Oh, yeah, I mean, look, yeah. You'd sell it. If we sold the asset today, you'd sell it for more than that.
Right, okay. Right. Well, look, Chris, thanks for your time. I appreciate that. Yeah. Do come back and keep us abreast of the story as it develops with the new plans, especially with the data mining element. Right? Yeah. That sounds very, very exciting to me. Thank you very much.
All right, thanks a lot.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest, and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.